Hello everyone, my name is Ricky Murthy. I'm a MBA student, executive student at IPMI International Business School, and I will be creating video of mind mapping regarding our class Corporate Finance by Professor Roy Semmel. In the Corporate Finance course, as you can see in the mind mapping rings I've created, in my understanding, it is divided by 3 rings. Ring 1, 2, and 3, and there will be interconnections among the aspects of study relevant to what I understand within the class. The ring 1 or link directed to the most general or important core aspects in the corporate finance, in my opinion. There are good corporate governance, stands for the tariff, and Ramcharan's business essential. Tarif in GCG stands for transparency, accountability, responsibility, independency, fairness. Tarif, therefore, it is branched out to the importance of speculation, meaning improvement in life, therefore relates a lot to transparency and fairness. After that, how to deal with fraud, as learned in week 6 with statistic male middle manager 41 to 50, and in order to create policy, needs to check physical, monetary, social, and moral. How about CSR, corporate social responsibility? Because shareholders needs to responsible within R of tariff to create a better environment for the company's behalf. This is also reflected to A, accountability, to CSR activity, which is being professionally responsible for the job. It is implicit, it goes without saying, and it has to be done. Tariff is also relevant to how to avoid investment fraud, as learned in week 2, because of T, which is transparent. To avoid investment fraud, should check the legality and investment permit of the company. Product has legal permit or not, and beware of time value of money. Regarding the principal agent problem, which is the agent, the one who is being ordered, and the principal is the one who supplies, and define the problem with 3 main components. The first one is asymmetric information, which agent has more information in the field than the shareholders, and then therefore will create misconception. The second one is conflict of interest. The third one is moral hazard. In Ramcharan business essentials, which is core or wing 1 in my opinion to corporate finance, because focus to number 1, cash generation, number 2, profit margin, number 3, velocity or the cash flow, number 4, growth, and finally number 5, customer focus. As you can see, it is branched out in my opinion to company's healthiness or portfolio investment and surviving and transforming business. First, branch out in the learning regarding RGR Nabisco's case of LBO. LBO is leverage buyout, because the company is doing well and needs to improve its capital structure with steps number 1, buy few 0 until 5% of public share usually, and number 2, become management under control KKR of RGR Nabisco. Number 3, issue the debt, and they will get cash from new debt, then cash used to buy rest of the stock, and then KKR becomes sole owner, not public shareholders. After that, they separate the companies, increase the value of the firm, and then remove conglomerate discounts and interaction costs. Therefore, debt ratio is increased, and optimum after that, in the relation to that, is good according to Gordon Gekko, which in this regard a positive context, because passion for improvement for the future. That the management gets out of the comfort zone, because they need to chase to improve the company more by increasing the debt ratio. As you can see within my mind mapping, there is a rule of 72. After goes to portfolio investment, which rule of 72 means number of years required to double an investment. The branch out of portfolio investment, there is the IRR, NPV, and PI. In PI, profitability index, IRR, internal required rate, and NPV, net present value. It is for capital budgeting to calculate and choose which project of investment is better, accept or reject. By doing this, you can estimate expected future cash flow, and these three methods consider cash flow, time value of money, and required rate of return. As you can see within the mind mapping, there is a optimum capital benefit. The branch out again of company healthiness is explained by Modigliani and Miller theorem. If you stack assumption, value of the firm increases means tax deductible through debt financing benefit. But the situation has to be in perfect box, no transaction, but in real life there will be transaction, therefore are not applicable. This is because they created a perfect benchmark against the reality that will be evaluated and needs to be integrated with financial distress, which depends on PV of financial distress cost. The higher, the more slope downward and of actual value of the firm of optimal debt ratio. If it goes up, and then there's point of going down because of that factor. The expected cost of financial distress are: the first one is volatility of cash flow will impact negatively. Higher volatility, the optimal debt ratio will decrease. The second one, liquidity ratio, current or quick ratio. The more, the better. The third one is Altman Z-score, and the fourth one is good corporate governance of company. As I said a little bit about Altman Z-score. As you can see within the mind mapping, what is Altman Z-score? Is a formula to predict whether a company goes to bankruptcy or not, with source of data coming from the financial statement report and financial ratio analysis. In surviving and transforming the business, can use the capital asset pricing model, CAPM, by getting the required rate of return through beta interpretation. Beta means systematic risk of the company divided by market risk. The higher the beta, the more contribution required to give to investor by giving market risk premium. This also means the total compensation we need to give investor under normal market risk circumstances. And as you can see, surviving and transforming business has regarded about international finance, which are foreign exchange market, how to trade on volatility. Forward means obligated buyer and seller execute at agreed maturity date. Option, it is asymmetric obligation. Contract gives its holder rights to buy a certain underlying asset with a certain predetermined price at a certain time in the future. Spot market, it's a settlement payment set immediately. Money machine examples such as transaction with interest rate and foreign exchange rupiah to USD in money market. Then use forward market to sell the US dollar in forward and get extra margin from it. But the problem is the risk of counterparty, which is the bank. This is also principal agent problem as linked within the mind mapping. Inflation and income differential and government trade restriction has an impact of the goods market and then to exchange rate between foreign and domestic currency, whereas interest rate differential and capital flow restriction has an impact on the financial market and then to exchange rate. This is also principal agent problem. Confirmation of EMH means performance of mutual funds is less than market index, no persistence of good performance, and the rise of index funds. above average performance and low cost. This is linked directly to market efficiency, in which the price reflects all available information. Therefore, financial asset prices are fair prices. They are neither too high nor too low. So what is the strategy? Number 1, diversify, select suitable asset allocation. Number 2, don't try to time security price movement. Number 3, keep tax consideration in mind. Number 4, passive investing, index fund, dollar cost averaging, and hopefully get a high return. To conclude, corporate finance hold money aspect in my opinion. Two things that are represent the most, which are core 1, Ramcharan Business Essential, and GCG. The core 2 is the explanation and can be representation of the core 1. And core 3 is the final cause and effect. Detailed results and more practical application can be used to our business. It's all integrated to what I've learned in corporate finance. I would like to thank you, Professor Roy Semble, to guide us, teach us, give many cases and great examples so we could understand corporate finance in IPMI International Business School. That's all the video for me from me for the mind mapping. Thank you so much for watching. Goodbye.